Welcome to the Real Estate Guys radio program. I'm your host, Robert Helms. Once a year, we get together with a bunch of our amazing listeners and an incredible faculty for our annual Investor Summit. Today, you'll hear some of the highlights and takeaways from the 2023 Investor Summit on Sand on the Real Estate Guys radio program.
If you love real estate and have always wanted to own your own business, listen up. The Real Estate Guys and their panel of experts want to teach you how to go full-time fast in the real estate syndication business. These next few years may go down in history as one of the best times ever to acquire investment real estate. There are deals everywhere if you know where to look and how to assemble the resources. The Secrets of Successful Syndication seminar will show you how to make big money doing big deals from a team of experts that have syndicated projects totaling more than $1 billion. Don't wait for someone to give you a raise or create a job for you. Attend the Secrets of Successful Syndication and learn how to build a team, raise capital, find deals, and make full-time money in 6 months or less. Go to realestateguysradio.com and click on events. All the big players use syndication as a way to diversify risk, optimize profits, and earn big money. You can too. Go to realestateguysradio.com and click on events.
Welcome to the Real Estate Guys radio program. We're at the 21st Annual Investor Summit on Sand with a live studio audience. We're here with our co-host, our financial strategist, Russell Gray.
Hey, Robert.
It has been a long time coming, turning 21.
Yes, it has been, and it's the world has changed quite a bit in the 21 years that we've been doing this. In the first 10 years, we were the smart guys in the room. We learned to retire from that position, and it's a good thing. And after the great financial crisis, we realized there's a whole lot of things going up in the macro that roll down to Main Street. So we use our summit as the opportunity to get away from the daily grind and nose in the weeds and the grindstone and step back and take a look at the big picture. That's why we call it a summit and not a conference. And so we take a look at the big picture, we consider what is it happening, how does it affect us, and what can we do? We're coming into this after seeing bank failures, inflation, so many things that have happened just in the last 12 months since we were here last time. So we've been able to spend time with George Gammon, Kenny McElroy, Dana Samuelson, just talking a lot about what's going on in the currency world, in the bond market world, in geopolitics, with inflation, with deflation, interest rates, gold. It's been very, very exciting.
And one of the things that we as real estate investors have to understand is those other asset classes, broader economic picture. It's why we have folks on our summit who aren't just 100% real estate centric. Real estate's awesome. We love real estate. If you love real estate, let's hear it. Real estate investors, we're in an economic sea with everybody else. And before you're a real estate investor, you're an investor. You put your money out into the world and you want it to come back with friends. One of the brain stretches, though, this week is that when it comes back, that dollar might not be worth as much.
Yeah, it's always a challenge. Real estate is a long-term investment. You're getting married to a degree, or at least a long-term relationship with a marketplace, with a demographic. There's supply and demand issues, and of course the local economy matters, and it's affected by the broader economy, inputs, costs, labor. You've got interest expense, regulations, local stuff going on. Are they friendly to business or not so friendly to business? And then when you look at some of the things we've talked about on this summit, the idea that George brought up, the idea that the government might even get back to the place like they did in the 70s, and I remember when this happened, instituting wage and price controls in order to try to curb inflation. That's pretty draconian. And you say, well, gosh, could that really happen? There's people here in this room that have had no idea that ever happened. In the United States, land of the free, federal government comes in by decree and says, you know what, Mr. Private Business Owner, you're not allowed to raise your prices. You are not allowed to give your people a raise. But of course, after going through the shutdowns, we've realized the government comes in and likes to tell small business people what they can and cannot do. So it's not that far-fetched. And so we can't control what these guys do. You know, you can vote and you can petition your government and all that stuff. But at the end of the day, you have to read and react. And sometimes you have to set aside your own political proclivities and say, you know what, it is what it is. And even though I don't like it, even though I don't agree with it, even though if you made me president or God for a day, I would do it differently. At the end of the day, it is what it is. And so what we've got to do is understand what it is, what are the different directions it could go, And when we look at it, what can we do to either capitalize on opportunity or mitigate risk? Crisis is two sides of a coin, right? There's always going to be challenges, and the other side of that's opportunities. And our ability to read, react, be resourceful is going to be based on our knowledge, our awareness of the facts, and the mastermind group, the people that we hang out with that can help us interpret what's happening and really see it from a 360.
So important to get around other opinions, other ideas. One of the things that's happened this week is not everybody agrees in the room, and that's a really good thing. If we're just all nodding our head yes the whole time, how boring would that be? And there's already been some fire back and forth and dinner conversations. I don't see it that way. But what's great about it is people are respectful about it. And, Stephen Covey said, seek first to understand and then be understood. So there's a lot of listening as well as a lot of talking going on. Back with us for the 11th time out of 21, let's welcome the amazing Kenny McElroy, ladies and gentlemen. Kenny, how's it going, man?
Good. Thanks for having me back.
Thrilled to have you back. A lot has changed. Just last year when we were here, interest rates didn't seem that bad. Things were going along. There were challenges and problems, but whoa, have we seen a big change in a short period of time.
What a difference a year makes.
Yeah, it's true. Tell us from the multifamily space what you're seeing today.
Well, we still are seeing shortages just like we were a year ago. The only difference is that it's harder to build, it costs more to build, and the rates on the interest from the banking have gone up, and of course that has reduced the number of supply that's coming, so it's unfortunately going the wrong way. What we need is more supply, and I think that's going to turn into higher rents.
Well, and you're just not speculating, you're putting your money where your mouth is. In addition to buying properties that exist, you and your partner Ross are under construction on several projects right now. Can you speak to that?
Yeah, of course. I think everyone has momentum at some point. They have velocity in their own companies, whether that's construction or development or maybe buying some value adds or single families or whatever it might be. We're all in the business, and I think George said it perfectly, George Gammon. You don't have to be doing something all the time. There are times where a prudent business person puts things on pause and then sits back and tries to see what's going to happen, because at the end of the day, a lot of it, we use other people's money. And whether that's in the form of a bank, in the form of debt, or whether or not it's your own, or whether it's a syndication, it's still other people's money.
Well, it's such a good point. We've done a lot of shows over the years. You've had us on your podcast. You've been on our podcast a bunch. And I remember a few years back, the emphasis of the conversation we had for an hour wasn't about finding new markets, getting great properties. You guys were focused for a while just on pure operations. How do we take what we already have and make it work better? Are those times coming?
Well, they're here. So, what's happened, as everybody knows, we've had high inflation, we've had supply chain issues, and, while some of that might be temporary and might be back down to earth, not all of it. So we've definitely seen higher wages, we've definitely seen higher utilities, we've definitely seen higher property taxes, higher insurance. So what you have to do now is you have to focus on all the line items, make sure they're in order, make sure that you're doing the best that you can to get all those in order, and then, of course, focus on the revenue. So right now, we're focusing on operations, on all our properties, but also in-house. And I think what happens when the market's going up and everybody's making a bunch of money, there's no stress. So now that that's tempering, I think that people are starting to have to look at their deals, their structures, they're pulling out their legal agreements. They're looking at all their line items and taking a look at what their next moves are going to be. So I think that's actually good for business.
So to shift gears just a little bit, when you've been as many times as you have, you've seen a changing landscape, but so have your kids. Your boys, Kyle and Cade, started coming when they were pre-teen, and they're both with us again this year as part of our Young Investor Program. Talk about that.
Well, they're listening this time. So that's the big change. They've been in the room the whole time, but now they're here, they're listening, they're asking questions, which is amazing. Afterwards, after the sessions, you've got some incredible speakers here. We were upstairs after the panel we had with George Gammon and the rest of the folks, and they're asking great questions, just like all of us. It's a confusing time, and that's why we come to these things.
It's tough to be brand new as an investor or starting off in your career and being in such interesting times, but that's been true to say for about the last 2 decades. So the great thing about young folks is if they'll get involved early, then all of that magic of compound interest working over time works for them. If you don't start till you're 50 or 60, you could still do really well. But gosh, if you could start when you were 20,
Yeah, and the other really neat thing is that I went home the other day and we had 20 of those kids at our house. And, I had to smile because here they all are learning together, talking about what they saw that day, but they're also making friends and they're building their own networks for people from their parents that brought them. So it's pretty neat.
hey, if you've had an awesome conversation with a young adult this week, by show of applause, let us know. Every year, we carve out some spots for investors that are 18 to 25 years old, and they come at a reduced rate. It's less than the cost to put the summit on. And even if that's too much, we have an awesome scholarship program. We're just a few days into the summit now, and we're already to the good, about $5,000 in our Godfather Scholarship Program, and that's what helps folks next year if they need some help with the pricing. So we've got a big initiative coming up for young adults because they are the future, as trite as that is, and I'm just always so proud of the fact that the folks that do show up, they aren't just here to party and have a good time. Although they are having a good time, they're really focused on learning and relationships and that stuff, and it's great to see that within your own household.
Yeah, well, I said it the other day, and I meant it. Kids don't always listen to their parents, so sometimes when you can bring them to an environment like this and they're learning from others, sometimes stuff slips in, and it takes a village, and it's true. It's always been true. So I just appreciate, I think environment is stronger than will by a long shot. So this is a good spot for them.
Let's give him a hand. This is Kenny McElroy, ladies and gentlemen. You're tuned to the Real Estate Guys radio program. We're at the Investors Summit with a live studio audience.
Live nationwide. You're listening to the Real Estate Guys. Find out more at realestateguysradio.com.
As I speak, inflation is robbing you at a rate north of 10%. Last year, the number one zip code that Mid-South homebuyers offered income property to Real Estate Guys listeners in appreciated by 21%. To harness that spread and protect and grow your wealth in the current economic storm, you need the 2 decades of experience in renovation and management that Mid-South homebuyers brings to their investors. Every home Mid-South offers you will have brand new components, a new 30-year roof, and a high-quality renter, all in a price range under $150,000. Their empathetic property managers will use your ROI as their North Star, while the lack of repairs on their totally renovated properties contributes to their almost 4-year average renter stay and 99% occupancy rate. Learn about their lifetime occupancy guarantee and total 1-year maintenance guarantee by emailing midsouth@realestateguysradio.com. That's midsouth@realestateguysradio.com. You'll be glad you did.
Hey, this is Brad Sumrock, and I'm super excited to share with you about our 6th annual Apartment Investor National Conference, AIM-NATCon. This is the 6th year we've done this event, and in the past we've had world-class speakers like Robert Kiyosaki, Grant Cardone, Jesse Itzler, Ed Milet. And this year, it's going to be so many great speakers. We already have some lined up. It's going to be an outstanding event, whether you're new to apartments, already syndicating large deals, already have a successful business. If you want to learn how to make more money and pay less taxes with apartment investing, this is the event for you.
Join the Apartment King, Brad Sumrock, and our rock star lineup of speakers at the 6th Annual Apartment Investor Mastery National Conference, AIM-NATCon 2023. It happens in Dallas, Texas, August 25th through 27th, and you get all the details by sending an email to aimnatcon@realestateguysradio.com. That's aimnatcon@realestateguysradio.com.
Hey everybody, it's Jay Papazan, co-author of The One Thing, and you're listening to The Real Estate Guys.
Welcome back to the Real Estate Guys radio program. Now in our 27th year of broadcast, we are at the 21st Annual Investors Summit on Sand, and we have a live studio audience. What a time we've had. It's been awesome. It's been amazing. It's been what we've expected and not what we've expected. But I tell you, today, everything shifted when we said hello for the third time to our good friend, George Gammon, ladies and gentlemen. George, welcome back.
Oh, thanks for having me. It's a pleasure to be here.
We're happy to have you. We wish you had your voice, but you gave us a great rendition this morning. And, you know, if folks follow you, they understand that you look at the big picture a ton. And here we are, a bunch of real estate investors needing to help understand. You shared some really great points this morning. Take us through just a couple of the highlights.
Well, I think the easiest thing for people to do right now in the global macroeconomic environment, especially if they're Americans, is just look at the yield curve, which is simply the 2-year Treasury yield compared to the 10-year Treasury yield. Usually, in a healthy economic environment, the rate on the 10-year should be higher than the 2-year, but it's actually been inverted for about 6 months, about 9 months, maybe a little longer. So what that tells you is, going back to 1950, the probability of having a recession or an economic depression is very high right now, but it doesn't usually happen while the curve is inverted. So the easiest thing for the average investor to do is just sit there and watch the 2-year Treasury. And when that 2-year Treasury yield goes back down below the 10-year, if history is a teacher, if history is a guide, that means that the probability of us having a recession is very high. So my advice to investors is I can't give them any advice other than what I'm doing in my own personal portfolio, which is just sitting back and waiting. I don't think we always have to be doing something. We just be patient and we look for opportunities. And the great thing is that regardless of what type of downturn we have, it always presents tremendous opportunities for those who are educated and those who are prepared. So right now I'm holding a little bit larger cash position and just waiting for that 2-year to go below the 10-year. And then I'll reassess, see how it plays out. And then when the curve steepens back up by the 10-year going above the 2-year, which is the good way for the yield curve to steepen, then I'll look at what opportunities present themselves, and I'll go ahead and take action.
Because as you showed us today, you showed us the chart where we could see where we saw the inversion over history, and then it would come back, and then we'd have the issue. So we've seen that happen time and time again. As you said, there are no certainties, just probabilities. But if we look at how many times that happens, it seems pretty likely. Then you layer on top of that the fact that we have in our market, in real estate, constrained supply and those kinds of things. And you've always said that the secret to success in investing is buying things when they're cheap. And to your point, real estate is not necessarily cheap right now.
Yeah, but what you do is you educate yourself. So when it does become cheap, you've got an edge, and then you can go ahead and pull the trigger and take advantage of those opportunities. I think that's really what's key. And we all know the problems in the regional banking system. We'll call it with the increase in interest rates or commercial real estate. That is putting real estate investors potentially in a tough position over the next 6 to 9 months, maybe a year, because it's going to be harder to get that credit, that liquidity that they need, because these banks are really pulling back. And if you look at the liability side of their balance sheet, you know what they do is they borrow short and lend long, right? We all know that. So, but what they're having to do, especially these regionals, is pay their depositors a lot higher interest rate to compete with what they can get on T-bills or what they can get in a money market fund. So this squeezes their margins. But not only does it squeeze their margins, but it changes the risk reward, right? So if there's less reward, then they're going to take far less risk. So that means that there's less liquidity out there for real estate investors. And you can do one of two things. You can sit there and say, oh, well, that's bad. But you can also sit back and say, hey, wow, that's going to present a fantastic opportunity for those people who have a little bit of dry powder, who have the education, that have the know-how, that have the edge to go ahead and pull the trigger when things get cheap.
You know, you had a paradigm you broke for a lot of us today, which is the cost of money versus the availability of money. Just because the interest rates are high doesn't mean money supply is tight, and vice versa. Just because interest rates are down doesn't mean that we have loose lending. Can you speak a little to that? I think I saw some light bulbs go on.
Sure. Well, if you look at the 1970s, we had very high M2 money growth, and that was a result mostly of bank lending, where in the 1940s, it was more of a result of fiscal fiscal deficit spending, right? So the banking system was creating a lot of brand new currency units. And that's one of the things that fueled the high rates of inflation that we had during the 1970s. Well, if it's creating high amount of currency units, it's lending a lot. Okay, we know what happened in the 1970s. The interest rates were very high.
Yeah.
So money was incredibly loose in the 1970s, but we had interest rates at 18%. Right. So what that just means is that it's very easy for the average Joe out there, if they're credit worthy, to get a loan, and maybe not just to get a loan, but to get a loan to buy an asset, to buy a property, but also to start a business. You contrast that with the 2010s, where interest rates were very, very low. And sure, it was easy for Jamie Dimon to get a loan, but it wasn't easy for the average Joe. I told the story of in 2012 when I retired, and I bought all of those rental properties in A and B neighborhoods, and I owned them outright, 100%. I had no credit against them or no loans against them. And then I filled them with renters, so I had that cash flow coming in. I go to the bank, and they wouldn't give me a loan. They wouldn't even give me a line of credit for 40% LTV, and I had fantastic credit score. That's an example of interest rates being very, very low, but money actually being tight for the real economy, whereas in the 1970s, interest rates were high, but money was very, very loose.
Let's hear a show of applause if you learned something from George today. George, one of the things people know you for is your whiteboard videos. You've been doing that a long time, and you explain things very simply. Talk about the process that you've gone through, because you're self-taught in this area. You're not a guy that's got piles full of PhDs and all that kind of stuff, but you have a process that you think through, and you help us think through. How do you get your mind around all this stuff?
It takes a lot of time. And the good news is I'm no smarter than anybody else, probably less intelligent, but I'm just very stubborn, I think is the right word. And if I don't understand something, it really bothers me. It really bothers me. And even when I started my YouTube channel, there was tons of stuff that I didn't understand, a lot of it. And I was scared to death when I first started doing videos that I would say something stupid and that I would say something incorrect. So what I would do is I would just study and study and study and study to make sure that what I was talking about on the whiteboard video was correct.
Yeah.
Because I was so paranoid about doing a video and then all the comments saying, no, you idiot, you got it wrong, blah, 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 right? And I still got a lot of things wrong because I didn't understand the monetary system, as an example, near as well as I understand it today. But it was just simply that stick-to-itiveness of not understanding something, and instead of saying, well, I'm just not smart enough, or well, I'll just get my information from the mainstream media, I said, no. I'm going to sit here and study this and try to put the pieces of the puzzle together until I do understand it completely. And it's that process that kind of took me from where I was to where I am today.
Love that. You can find out more at georgegammon.com. How about a hand for the Rebel Capitalist? So economics is important. We, for a long time as real estate investors, have looked at things like the bond market and things like oil and gas and things like precious metals. Let's welcome back to the Investor Summit and the Real Estate Guys radio program, our good friend Dana Samuelson. Good to see you, my friend.
It's great to be here, Robert. Summit Week is one of my favorite weeks of the year. It starts with you and Russ and your great team, but more importantly, it is the attendees that come and the vast experience and knowledge they have. But more importantly, they're all giving people, and they'll all share and help. I've said this before, and I'll say it again. It's the most unassuming group of overachievers I've ever met in my life, and I love being here with them.
That is so true. That's you guys. So we are looking at uncertainty. Anytime we're looking at uncertainty, there's certain barometers we use, and over the years we've talked about the precious metals kind of help us do that. You shared today some of the big picture of what was happening. Share with us some of the highlights there, if you would.
Well, we're in a changing world environment. We've had, a year ago when we were here, inflation was 9%. Now it's down to 5%. Interest rates were 1 or 2%. Now they're up to 5%. So keeping up on all these changing things is important. More importantly, we're seeing a big geopolitical shift these days where we're having BRICS nations coming together and growing, wanting to do less transactions in the dollar. We've seen the weaponization of the dollar by the U.S. against Russia create incentives for other countries to have a plan B in case something similar were to happen to them. So we had a discussion about that and the greater implications for the dollar in the long term. George was excellent in offering some of his observations on what he thinks will happen. And I'm still trying to get my head all the way around some of those because he's so brilliant. But gold's been bumping up against all-time highs over the last couple of months because of the Silicon Valley Bank problem and the other bank failures. And that's a systemic issue, and gold tends to climb a wall of worry. And I doubt that we're quite out of the woods yet. So having some precious metals is a good thing for most people. Not a lot, but a little to help get you through troubled times. We're in a challenging environment, and being in this environment where you can talk to and learn from and get perspective from other people who are brilliant is important to help develop your own strategy and game plan for what you think will come in the future.
You know, we've got a lot of our real estate folks here, obviously, but there's a few gold bugs in the room and people that have started to add it to their portfolio, thanks in great part to your teaching. But one of the things I love when you do is when you share with a brand new person. So we've had you do some of these small format roundtables, you host a table at dinner. Talk about just that process of people who never thought the metals made any sense to now coming around at least this way of maybe I should put some of my assets in a safe place like that.
Well, gold is simply an asset that has no counterparty risk, and there is a lot of counterparty risk in the world today. It's a great way for most people to get some of their savings out of the banking system, get some of their hard-earned wealth into an asset class that won't depreciate like the dollar will, that's infected by inflation. And I just love trying to help people understand why gold is important as part of an asset protection plan and how to effectively buy and sell. You know, I learned from Robert Kiyosaki at my second summit that it's all just about education. And he taught me that I need to be a teacher, and all I am really is just an experienced nerd. And I love trying to help other people. That's really what I love to try and do.
Over 4 decades in the business. How about a hand for Dana Samuelson? You're tuned to the Real Estate Guys radio program. More when we come back. I'm your host, Robert Helms.
Real estate investment advice right in your mailbox. Sign up for the free Real Estate Guys newsletter at realestateguysradio.com.
The Real Estate Guys are throwing a party and you're invited. Join us at the New Orleans Investment Conference, November 1st through 4th. Now in its 49th year, it's the world's longest running investment conference and features some of the biggest names in economics and investing, including James Rickards, George Gammon, Danielle DiMartino Booth, Rick Rule, and Peter Schiff. The Real Estate Guys are speaking in multiple sessions, attending lots of others, and we're hosting an invitation-only party one of the evenings for our friends and listeners, including some VIPs for you to mingle with. So make your plans to join the Real Estate Guys at the New Orleans Investment Conference. With all that's going on in the world, no serious investor can afford to miss it. Send an email to neworleans@realestateguysradio.com and we'll get you all the details. That's neworleans@realestateguysradio.com. And we'll see you there. Are you achieving everything you want in life? What if there was a time-tested way for you to get everything you've ever dreamed of? The most successful people in life set goals and keep themselves accountable. But how? The good news is that it's not rocket science. You too can learn the skills and unleash the motivation that will create success in your life. Hi, this is Robert Helms, and I'd like to personally invite you to attend Create Your Future, the 2024 Goals Retreat, January 12th to 14th in Dallas, Texas. This unique weekend event has been called phenomenal, inspirational, and life-changing by the thousands of people that have attended. Hear from some of them and find out more at goalsretreat.com. Get your life back on track, physically, spiritually, and financially. Attend the 2024 Goals Retreat on the second weekend of the new year. Visit goalsretreat.com to learn more and get on the advanced notice list. This is no dress rehearsal. Live the life you were meant to. Visit goalsretreat.com or call 888-489-7723 extension 18. That's goalsretreat.com.
Hi, this is Peter Schiff, and you are listening to The Real Estate Guys.
Welcome back to the Real Estate Guys radio program. We're bringing you highlights of the 2023 Investor Summit on Sand. Before we get back to those interviews, it's time to play Real Estate Trivia, your chance to win a prize by knowing today's Real Estate Trivia question. As soon as you hear the question and think you know the answer, send your best guess to trivia@realestateguysradio.com. Trivia@realestateguysradio.com. Send us the answer to the question along with your name and physical mailing address, because if you're the first person to get it right, you're going to get an autographed copy of the ABCs of Buying Rental Property by our good friend Ken McElroy. Before we give you this week's question, last week on the Real Estate Guys, it was clues in the news, and we asked this: of the top 20 most air-polluted cities on Earth in 2022, 14 were in one country. Which one? Well, according to the World Health Organization, 14 of the top 20 polluted cities are in India, followed by Pakistan with 3. None of the top 20 polluted cities were in Europe or in North or South America. If you live there, you can breathe easier. Here's our real estate trivia question for this week. Where in the world will you find the city of Cut and Shoot? Yeah, there's an actual city named Cut and Shoot. Where in the world is that? If you know or just want to take a guess, send your best guess to trivia@realestateguysradio.com. Trivia@realestateguysradio.com. We'll need your name, the answer to the question, and your physical mailing address. First person that gets it right gets the ABCs of Buying Rental Property, autographed by Ken McElroy. That's today's real estate trivia question. We are in beautiful Belize with a live studio audience. It's the 21st Annual Investor Summit on Sand. The first bunch of years, we were the summit at sea on a cruise ship. And then I can't remember, something happened in 2020 and we couldn't go. Oh, I remember the pandemic. Yep. And then we had the summit on screen, which meant we got together for 3 days on Zoom. In the words of Russ Gray, it was awesome and it sucked. It was awesome and it sucked. Well, now we're back the last several years to Summit on Sand. If you want to know where we're going next year and want to join us, just go to the website at realestateguysradio.com. Look at the button that says Summit and get on the advanced notice list for next year. We're talking about gold. Let's talk about another non-real estate asset that, like gold, gets pulled out of the ground, and that is oil. Welcome back to the Summit, Mr. R.J. Burr. How are you, man?
Oh, Robert, it's awesome. This is a tremendous place to be.
The first time you came on the summit, you weren't too sure about us. We weren't too sure about you, but that was a lot of years ago. Tell us about your experience in coming to a real estate event as the oil guy.
Well, the craziest thing about real estate and oil is the fact that they're first cousins. They might not be brother and sister, but really the only difference between surface real estate and my real estate is a couple thousand feet, and it's all based on location. And so when you have industries that mirror each other so well, it's a lot easier to explain what we're trying to do and it be accepted and be understood.
Our friend Dr. Chris Martenson talks about energy being the economy, and obviously this is the business you're in, but you also do experience the highs and the lows and all of that, and that can make investing in oil a bit, difficult for people, but you help make it pretty simple. Take us through what an investment in oil and gas even looks like.
Well, by nature, oil and gas is a speculative business. If anybody ever tells you differently, they're lying to you. You are taking a drill bit and you're drilling thousands of feet down and you're looking for something that nobody else has ever seen. The only person that knows what's down there actually is God. And so you can take all the geology, you can take everything you have, but really you have to get in the right positions. And then when it comes down to it, what separates the men from the boys, so to speak, in oil is how you manage the risk. Am I going to put my partners in a position where they have a 1 in 20 shot at making 10 to 1 on their money? Or am I put my partners in a position where they have a 90% shot at making 2 to 1 on their money? And so it's just a really matter of managing the risk reward and then doing what you say you're going to do.
Now, you've been in the business a long time, Many of our listeners have heard your dad, Bob Burr, on the show. He's been in the business even longer. There's been a lot of change in your industry. Talk about where it is today and where you think opportunity is.
Historically, all of your build your oil company overnight fields have already been discovered. Now, they might find some more of them. I could be proven wrong, but the odds of them finding another Prudhoe Bay here in the continent, no, it's not going to happen. And so to build a large oil company, it's based on the reserves you're able to acquire. And there's only two ways to acquire them. You either find them by drilling yourself, or you acquire them from somebody else and you buy them. Well, up until 2020, that was darn near impossible to acquire those large reserves. Well, then all of a sudden, not only did Corona happen, but you had the oil price crash. And when that happened, it created an opportunity in America that hadn't been present in almost 100 years. You have a chance to actually build a major oil company on American oil. That's only happened once over the last 40 years, and that was when two companies merged. There's not enough oil to get the reserves. Now there is, and you just have to know where to look and be aggressive and go get it.
You shared a fascinating thing in your talk, and that is, this is hard to get your mind around, but there were perfectly great oil discoveries, production coming out of the ground, and sometimes those companies from 5 years, 10 years, 20 years ago saw a shinier object. They just gave up there, went somewhere else where they could get a bigger pop, but there's still tons of oil in the ground there.
Oh, absolutely. And that's really, you look at timetables on when areas were developed, what technologies they were using, how are they developing the fields. And so we tend to stay away from fields that have been discovered over the last couple of decades. We look for fields that were discovered 100 years ago. Think of the technology they were using back then. And your original oil companies, I kind of look at them as spoiled kids, because a spoiled kid, what's their favorite toy? Their next toy. And so they might hit a couple of wells in one spot. All of a sudden they hit a well somewhere else. What'd that kid do? He just put a Han Solo brand new in a box, had never been opened, and he stuck it in the toy chest. And he goes somewhere else. So that's all we do. We go back and open up the toy chest and we grab all those Han Solos, and now they have an antique value and they're worth much more money.
Good stuff. Hey, if you're interested in oil and gas, all you have to do is send an email to oil@realestateguysradio.com. You'll learn about some of the great research these guys do. How about a hand for R.J. Burr? Another big topic we had this week was about real estate development, and the world has changed there too. A developer has to start earlier in the process than an investor. If I buy a fourplex somewhere, it's probably already built, it probably has tenants. Maybe the property management isn't great, but I can figure that stuff out. When you build from the beginning, there's all kinds of things to worry about, think about, and plan for. And we had a panel yesterday with a great number of builders and developers, which was, I thought, an extraordinary opportunity. We had Ken McElroy. He and his partner Ross have been building several projects over the years, and right now very active. Beth Clifford, the developer actually of the property we're at, which is kind of cool. Tracy Lamar, home builder. She's built commercial properties. And this gentleman, Mr. Victor Menasce. Welcome back, Victor. Thanks for coming. I know it's hard to get you here in between podcasts.
Great to be here, Robert.
Victor hosts the Real Estate Espresso podcast, which we barely get one out once a week, every day, ladies and gentlemen. So share with us some of your thought process on where we are, and then some of the things people need to be aware about when it comes to development.
We're certainly at an inflection point in the market where people are thinking that the market is still just an extension of what it was a year or two ago, and it's not. It's really changed quite a bit. What I think people need to do is lengthen the time horizon. Builders might have had a year or two of inventory in terms of land a year ago. Today, that might be 4 or 5 years of inventory. So whatever time horizon you were thinking was going to be at play, it's probably just gotten a lot longer. That's one major effect. The other thing I think that you need to pay attention to is some of the reports that you read in the news. The averages don't exist in reality. And that's a very painful trap if you fall into that trap. So you really need to remember that real estate is hyper-local. It follows the laws of supply and demand. To me, the law of supply and demand is like a law of physics. It's like gravity. And if you try and violate gravity, you're going to fall and you're going to get hurt.
Now, you have been developing through this entire changing market we've seen. So it's one thing to think, well, I'm looking out and seeing what's here right now. But you're in the middle of projects. You have projects that are almost done. You have projects that are about to start. How do you manage all of that in terms of figuring out the pivots necessary to move forward?
Yeah, that's a great question. The most important thing is to make sure that you don't get yourself upside down. You're not carrying too much debt, hopefully no debt, especially if you're dealing with land. And to remember that these projects follow a long time horizon. You know, we're doing some very large projects that might take 10 or 15 years. Well, of course there's going to be an economic cycle somewhere in the middle there. You'd be foolish not to plan for that. There might be even 2 or 3. So that's always going to be a factor of play, and you've got to take that into account.
Excellent. Now, what are we not seeing? Because right now we've heard that there's a shortage of certainly residential units, maybe not office, but some real estate uses, and yet there's more to the math than that. Some of the things that came up during the panel were pretty fascinating.
I'm actually not sure there is a shortage. I know that that's a statistic that's been quoted by the National Association of Realtors many times over the last couple of years, but I'll just take you back to 2007. Think about 2006, 2007, there were market conditions very similar to today. People were placing multiple offers over asking price, and then fast forward to 2009, and there were hundreds of thousands of vacant homes. Well, where did all the people go? Well, there were many of those foreclosures concentrated in 4 markets, in 4 counties in the nation: Miami-Dade County, Broward County, Maricopa County in Arizona, Las Vegas. What do all of those markets have in common? There was a very high percentage of second homes. So in an environment like that, people were saying, all right, if I have to let something go, I'll let the vacation home go and protect the homestead. So all of a sudden, this new supply that was invisible appeared in the market. And the question is, do those similar conditions exist today? How many short-term rentals are actually not performing that well that might represent shadow inventory that may reappear in the market? I'm not sure that the housing shortage is real.
There you go. How about a hand for Victor Menasce, ladies and gentlemen? You're tuned to the Real Estate Guys radio program. We'll be right back.
Need help with your real estate investment portfolio? Check out the resources page at realestateguysradio.com.
Hey, it's Robert Helms. Thanks so much for listening to the show today. I want to personally invite you to come see an amazing real estate market that combines excellent cash flow, offshore diversification, and what we affectionately call lifestyle investing. Come join me in the beautiful country of Belize. The Real Estate Guys have been bringing investors to Belize for more than 19 years now, and our discovery trip is designed to show you the market like nobody else can. Sure, Belize is breathtakingly beautiful. The people are wonderful. And wait till you taste the food. But the real opportunity is the real estate investment potential. How so? Well, that's what you have to come see. There's all types of opportunity in Belize when it comes to real estate investing, including both long and short-term rentals, commercial and retail triple net properties, business opportunities, land acquisition, development, agriculture, and lots more. And as the only country in Latin America with English as its official language, it's easy to understand the law. Property rights are strong, and contracts are in English. And in Ambergris Caye, the top tourist market, a unique situation exists where demand for rentals continues to outstrip supply, creating a compelling environment for investors. So come see for yourself. Join me in Ambergris Caye, Belize as we study the market, learn about the sustainable drivers, and tour lots of beautiful real estate. And like all of our field trips, there are no properties for sale during the weekend. Rather, you'll meet lots of local providers that will help educate you about the market so that you can follow up with them after the trip if the market is interesting to you. You've heard about Belize and the Real Estate Guys for all these years. Now come see what all the excitement is about. Plus, we'll have lots of time over meals and activities to talk about all things real estate. To get the details, go to the website at realestateguysradio.com and click on Events, where you'll find the Belize Discovery Trip. Once you register, you'll get information about our group hotel rates as well as travel details. So join me in Belize. It's a beautiful country with lots of amazing possibilities. And the only thing missing is you. Go to realestateguysradio.com under Events, and I look forward to seeing you in beautiful Belize.
Hi, this is Doug Casey, and you're listening to the Real Estate Guys.
Welcome back to the Real Estate Guys radio program. Thanks for tuning into the show, and a big thanks to our live studio audience. We have had such a fun time, and the really cool news is we're about to hit that point of the week where we get some time off. We get to hang out and swim and go see beautiful Belize. Some of you are going fishing. Some of you are just trying to find someplace with air conditioning. But whatever it is you're going to do, we're going to have fun. We are going to do sessions in the morning and stuff, which is always a ton of fun. We've got a couple interesting folks left to talk to. Anton Mattli is a commercial lender. If you had fun talking to Anton or learning from him, let's hear the round of applause. Welcome back, my friend, to the Investor Summit.
Yeah, thanks, Robert. Pleasure to be here again.
Well, and this is a different year, as we were talking about with Kenny. A lot has changed when it's come to loans, loan availability and pricing and terms, and then we have to talk about what's happened in the last couple of years, people that maybe chose loans they shouldn't have. Give us the state of the union on the commercial mortgage market.
Yes, sure. So looking back to the 90s, we had a former Fed chairman, Alan Greenspan, used the term irrational exuberance. And I think we have seen the same in the commercial real estate space, particularly multifamily and industrial, in 2021 and 2022. And particularly multifamily, we have seen a lot of bridge loans that were taken out at very high leverage, plus sometimes 80% LTC. In addition to that, very often pref equity on top of it. All these loans are coming due now over the next year or two, and we certainly see some stress there on top of also the stress we see on the office side. And the problem is, even though some of the office loans are not expiring yet or maturing yet, some of these tenants in these buildings are now renewing their leases, and these loans before maturity are already creating a stressful environment. Now, as a result of that, not only do we have roughly $1.5 trillion of commercial real estate loans coming due over the next 2 years, we also have a lot of stress with these loans where they cannot be refinanced, which more likely than not will result in much higher credit spreads than what we have seen so far.
Well, this is a good point. We assume, especially as residential investors, that, hey, if I need to refi, I can refi. Commercial, it's not quite like that. The lender is committing to a time period, and so is the borrower. But what happens if at the end of your 5 years, there isn't anybody to replace that money with?
Yes, that's a big problem. In a worst case, you cannot get any financing. Usually you will find some financing, but more likely than not, you have to bring additional equity to the table, which means capital calls.
Well, that leads to the other point. In the news in the last several weeks, we've heard of some real estate syndicators, folks that raise money for apartments, who have had challenges and issues. We've talked about this, and there's a good chance there's more of that coming. And what happened wasn't necessarily the property or even the tenant base. It had a lot to do with the financing. Can you speak to that?
Yes, certainly. Obviously, operationally, there can always be challenges. With that irrational exuberance, we certainly have seen some people buying properties at elevated prices and projecting into the future higher rents, higher other income, and sometimes even lowering expenses. And what we now have seen now, that obviously has not happened. Now the problem also was, and I mentioned that a short while ago, was that they also added significant amount of leverage. There is nothing wrong with taking out a bridge loan for a true value-add property, but when you buy a stabilized property rather than with an agency loan where you might get just 55 or 60% LTV, you take out a bridge loan at 80% LTC, and then on top of that you raise money from a pref equity provider that tends to be asking for somewhere around 13 to 15% back then in preferred return, and you just raise the minimum amount of equity required to close that loan. There is no margin for error at all, and that's what we are seeing now a lot.
Well, I think one of the lessons we're getting this week is that we can't just invest as though the sun would always shine. We have to think about the various scenarios, and hopefully we're opening up people's minds to that. How about a big hand for Anton Mattli? Now, for the second year in a row, we've had a really cool exercise we call Capitalism Without Currency. And what that is training your brain to think outside of your nation's home currency. In this case, we primarily use the US dollar, since most of us, if we don't live in the US, at least we're familiar with and probably have US dollars. And to help us do that, we had this gentleman help us out, Steve Streetman. Let's hear a hand for him. Before we even talk about that, Steve, welcome back year 2. What's the difference between the first time you come on the summit and the time you come back?
Well, you kind of know where things are, and you know a lot of the people, and this turns into something, a cross between a family reunion and a mastermind group. And you can't go to get a mastermind at your family reunion. You don't get a family reunion at most mastermind groups. It's an amazing combination. Fabulous people here, and it's a lot of fun.
We met Steve because he sent us his book. He wrote a book on the intersection of cryptocurrency and real estate. We thought, wow, that's pretty interesting. But then we found out that you're a member of the National Council of Exchangers, and that's a subset of real estate where they deal with trading, bartering, looking at different creative ways to facilitate real estate transactions. And that led us to something that we did for the first day and we'll do again before we're done. Tell us about the cowboy auction.
Well, first, just as a disclaimer, there are no cowboys harmed in the conduct of this auction. So a cowboy auction is a way of doing personal property trades. And what it does is it elicits from the crowd different things that they have or different services that they can provide. And it allows you to structure multi-leg transactions. It's kind of hard to find something where you want what I have and I want what you have. But if there are 3 or 4 or 5 people in the room, often we can find something where I want what Russ has, and Russ wants what Robert has, and Robert wants what I have. And so you can close these loops and you can find transactions. What's really cool about it is people start putting services, or they discover something that they can do, they thought of, they put up on the board, and all of a sudden people want what they had. People have activities and services they didn't even know they had that had incredible value to people in the room. So it allows you also to make connections with people in the room, especially when you're delivering the services later, which we're supposed to do with the auction.
Well, it's a big part of building community. And I think the other thing is, like in any great transaction, it's a win-win for everybody. Everybody leaves a transaction, whether it's 2 or 3 or 5 legs, if you will, feeling like they got the better end of the deal.
Yeah, you only get what you've decided to bid on. So you bid on something, and if you're selected, you get what you bid on. We start with the top of the board. It's like a big pyramid of options. The person at the top of the board can choose anything he wants, and then it works out all the other transactions so the other people will get what they bid on. It's really kind of a cool way of doing it, and it allows you to find ways of making these transactions you wouldn't have discovered otherwise.
It was awesome to see the creativity, especially from some of our young people. If you were part of a trade or just were impressed by one, round of applause. All right, well, it's been an outstanding week. We hope to do it in next year. Actually, we'll hope to do it again next week when we have part 2 of this show. But in the meantime, go out and make some equity happen. More next week from the 21st Annual Investors Summit on Sand. If you'd like to join us for the summit in 2024, get on the advance notice list by sending an email to summit@realestateguysradio.com.
This episode of the Real Estate Guys Radio Show is brought to you by Paradigm Life. Powerful cash management strategies using life insurance. Learn more at beyourbank.com. Mid-South Home Buyers. Low-cost, turnkey cash flow properties in Memphis, Tennessee. Corporate Direct. Asset protection strategies for real estate investors from attorney and Rich Dad advisor Garrett Sutton. Find these and other great companies under the Resources tab at realestateguysradio.com. To learn how you can expose your product or service to the Real Estate Guys audience, call 888-489-7723 extension 4. That's 888-489-7723 extension 4. Or use the feedback page at realestateguysradio.com. Thanks for listening, and we'll see you next week right here on the Real Estate Guys Radio Show.